And sometimes this is the difficult part, is we don't get to focus it on what happened in the past and do not believe that because it happened in the past, this will happen in the future. But of course, take the lessons learned and hope for a great future, a great future, a great future.
Hey there, Jeff Barnes here again with another episode of Angels, Exits, and Acquisitions. And today we're interviewing Mike Diaz from Portugal. He runs a company called Scale Up Valley, and we talked a lot about scaling up companies for an IPO, for an acquisition, what it takes, what the CEOs need to be thinking about, what they need to be doing, what the executive leadership team needs to be doing, depending on the stage of business. And it's really important because he and I have kind of a similar upbringing and background that I think plays a lot into our thought processes and what we believe when it comes to looking at a great opportunity or a great leadership team and a great CEO. So tune in, looking forward to hearing your thoughts on this episode of Angels, Exits, and Acquisitions.
Welcome to Angels, Exits, and Acquisitions, the place to learn how to fund, scale, exit, and massively profit as an angel investor or entrepreneur. Brought to you by the Angel Investors Network. And now, here's your host, Jeff Barnes.
Hello and welcome back to another episode of Angels, Exits, and Acquisitions. I am your host, Jeff Barnes, and we are joined today with Mike Diaz from Portugal. Mike, how are you doing today?
Very well, Jeff, and congrats for your podcast and for your career, and thanks for making the time to hosting me today.
Wonderful. I appreciate having you here. So, Mike, we're going to dive into your story and what it is you do with helping companies scale and achieve those exits and those really big multiples of valuation and whatnot. But I was noticing your background there, and of course you got Warren Buffett on one hand, and you got Robert Kiyosaki on the other side. And I got to say, those two gentlemen were instrumental in my development into the entrepreneurial world. I got a chance to meet and hang out with Robert Kiyosaki a few years back and smoke a cigar and have a scotch with him. Haven't met Warren Buffett yet. Not sure that I'll be able to check that one off. But Snowball is quite the interesting book, isn't it?
Yes, absolutely. Great one.
All right. So, tell everybody a little bit about who Mike Diaz is and where did you get your start and how did you end up, bring us up to kind of current day. How did you get to Scale Up Valley and doing what it is you do? And then we'll talk a little bit about that.
Sure, with pleasure, Jeff. So starting from the beginning, all my passion started in a shoes manufacturing company of my parents. So very young, I was always there. When I was outside of school, I was going to the factory and seeing all the employees of the factory and imagining that one day I would be succeeding my father. That was already the third generation in the business. Unfortunately, it didn't happen. But it stayed my passion to help CEOs and to become myself a CEO and lead companies since then. And it also helped me a lot because it was a very tough situation as a family because it was a bankruptcy that we went through. So a low margins industries, when the Asian markets open it was impossible to compete based on price. We needed to change the business model, go much more on the quality, on the design, on building brands instead of just manufacturing and competing on time. Because at that time, labor costs in Asia were much lower than in Europe, where the company was based. I'm originally from Portugal. I've been working mainly in North America and Northern Europe, also experienced in Latam and Southeast Asia. But that's where it all started. After that, I started working in the branding agency where I did a bit of everything. I was kind of the second in command of the company, did a bit of finance, a bit of project management, brand consulting, strategy consulting, talking with the CEO all the time about what we needed to do to scale the company. And after some time, the CEO decided to invite me to become the CEO of the company because he wanted to dedicate himself to academia. And I've been there leading the company. We exited it to our largest customer at the time. And since then, I decided that I wanted to dedicate myself full time to advise or to coach CEOs and leadership teams to scale their companies. So, and that's when I founded Scale Up Valley 11 years ago, 2013. Just changed it the year. Still have the 10 years, but now it's 11 years. And since then it was all about, I identified a niche where that was really new at the time, which was not new. I'd say it was becoming more and more popular, which was the VC backed niche or venture capital backed niche, where we needed to double, triple revenue every single year and get from $0 to $100 million in revenue in under a decade, or in a decade would be already a huge success. I didn't have any idea about how difficult it was to do, but it sounded fun. And at the same time, I was much more used to work with more traditional industries at the time. And usually we would be meeting week after week, nothing happened. There was no sense of urgency. Companies were stable. It was much more lifestyle businesses. And that's when I said, oh, this is fantastic. We have pressure to grow, so we need to invest. There's a lot of capital that we need to raise. That's where it all started. And I was super lucky to be involved in one IPO, one decacorn, and 4 unicorns. Nowadays, I believe much more. I think that we all learn with this age and era of of venture capital. I still believe that venture capital is ideal for a certain kind of companies. I don't believe it is ideal for the mass market. It's really for a specific niche of companies, and that's what I've learned. So nowadays, I love much more the concept of building legacies, building companies to stay, to last for the long term, and of course also making profitable machines that also create cash flow and create amazing cultures for the teams who are delivering value to the customer and to everyone involved in the company. So I'm an expert in helping those companies scale, and I coach the CEO and the leadership team in the process, and nowadays sometimes as well the board.
Awesome. Wonderful. Well, thanks for that background. So I want to go back to like the early days, the very beginning. So you and I share a little bit of a similar history there. My dad was a small business owner. He actually did hardwood floors, and at one point had 50 employees and was doing some of the biggest and nicest floors in Southern California and Beverly Hills, and some really, really cool places. And as a young kid, I didn't understand at all what my dad did. And, he'd take me to a job and I get to see he would actually put the floors in and make it look really pretty. And so you got to get a sense for that. But I didn't understand anything on the business side. And similar kind of situation, unfortunately, he had a partner who embezzled from him and ended up with a drug problem. And this partner stole all the money and kind of ruined the business, bankrupted the business. And so this small company that my dad had that was taking care of the family was all of a sudden essentially gone, and he had to restart from the ground up. We moved, and it was challenging. And I'll tell you, so the thing that I learned and that I went through, and I'm curious what your thought was I said, I'm not going to go and be an entrepreneur and be a business owner. I saw how hard this was. I just want a stable job. That's why I ended up joining the military, but I just want something stable. So what was your thought process when you watched your family kind of go through that as well?
I think that the fear of loss is quite intense. I always need to go through it. And I always need to, heal the trauma, and always work on my self-confidence. And especially when the situation is tough, I see that my body reacts to it and my mind reacts to it more heavily. But over the time, I'm learning to get stronger at it, I think that there is always this balance, and maybe some of your listeners identify, others not. I'm kind of a Taurus mindset, so I'm someone who loves structure, who loves stability, who loves control, and at the same time I have an entrepreneurial mindset who loves ambition, who loves to go beyond your skills, who loves to challenge myself. So in that sense, who loves to go further and to build my own businesses. So in that sense, yeah, that was the fear, but I always had this dream in my mind that I wanted to, and maybe it was kind of and nowadays I'm much more self-aware about why I'm doing what I'm doing, because I think that we need to do things because we believe it's the best thing for us, not because we want to impress others. And sometimes I think that I wanted to create a successful business to show, to kind of save the image of my parents at the time, because
Yeah.
it was really kind of coming from the top, going to holidays in the best places in the world, having the best clothes, the best cars. Even today, I just posted on LinkedIn. My dad had a Saab, a Swedish brand of cars that I really wanted to take it, but at the time the car was broken. Then we entered in the bankruptcy, so then my father didn't have the capacity to stay with a car and to buy a top brand car at the time. And I always had that dream. I was just saying in the post, maybe I just need to find one Saab and just take it and drive it. But yeah, that's the way there is a lot of healing and a lot of anger, frustration. But after we go through it, I think that we become also better coaches, better CEOs, better leaders. And yeah, I think that we are also more aware of the emotions of others and our own emotions, and we are able to deal better with fear, right?
Right. Absolutely. And I think if somebody hasn't gone through loss like that, right? Whether it's their own personal loss or their family's loss or something like that, and they haven't experienced it, then I have mixed feelings. Sometimes I think those are the people that they've gone through that and they've come out the other side. They're generally better leaders. But on the other hand, in some companies, you want that bold, fearless leader that's just going to, shoot for the moon. And that's what a lot of VCs are looking for. It's what a lot of people are looking for, is that fearless leader. But sometimes I think that unbridled enthusiasm, that someone that's never experienced this pain and this loss and this total failure of having to reset, sometimes that can be, like a bull in the china shop. You don't really want that person necessarily in charge, because, especially if it's with your money, right? That's I think where the big issue is. It's one thing if you are, the young, hungry entrepreneur. Everybody wants that person to succeed, but I work with a lot of investors. I think sometimes there's that unspoken thing that they can't quite put their finger on it. Like, yeah, I like the person, I like the company, I like the idea. They actually have a really good team, but they won't pull the trigger and do the investment. And sometimes they can't even say why. They're like, I just don't get a great feeling about it. And sometimes I think that is it, right? This person is so optimistic. They have convinced everyone they're going to succeed come hell or high water. And they feel that way because they've never experienced an actual loss, which, again, that's a good thing to have, but it can, in my opinion, sometimes make it very difficult for them to see the potential risks. Do you agree with that, or what's your thought and your take on some entrepreneurs that have gone through this or not?
I think those are great insights, Jeff. So it's kind of the sentence that came to my mind when we were sharing your view was really aim for the best and plan for the worst. Right. So, and this is the difficult part of being a CEO and being an entrepreneur and leading a company is you need to combine the long term, the mid term, and the short term. It's not only the short or the long. I think that in the past, when I became an entrepreneur in the early days, I was very long term driven, but I didn't pay too much attention to action, to short term, and then I was very good at long term and short term, but I was missing the mid term, where I think a lot of entrepreneurs fell is. What is the next year, the next 3 quarters, not only this quarter or the next 3 or 5 years. So what is in the middle? What are those key initiatives that we need to do? We need to execute this quarter to have results in 3 or 4 quarters. But if we don't execute them now, we will not have those results. So yeah, and also how do we combine the strategic mindset with a tactical mindset with operational mindset, which is kind of the same of the short, mid, and long term set, in other words. So yeah, I believe that because being an entrepreneur, that's really that, right? So, and I also love that quote about going from defeat into defeat, and without never losing the enthusiasm. And I think that's the life of the entrepreneur. And sometimes this is the difficult part, is we don't get to focus it on what happened in the past and do not believe that because it happened in the past, this will happen in the future. But of course, take the lessons learned and hope for a great future, imagine a great future, but also with the confidence that if something bad happens, if there is a problem, there is a solution, right? So we will find the solution. And if we don't have the solution yet, the solution is available. It's because we don't have the competences or the skills or the network, or we are not surrounded by the right people to help us solve the problem. But there is always a solution by definition when there is a problem, right? So I think those kind of beliefs are really important for an entrepreneur to keep moving forward, because as we know, especially the early days until we find product market fits, those are really, really tough because we are still in the search mode. So that's why I love so much more the scaling up stage of business, because at least there is a solid rock in the business that already works. That it is validated, right? So now we might need to add new geographies, add new products, add new segments, add new verticals to the mix. And of course, we need to prove it all again. But at the same time, we already have a certain source of cash flow and profitability in the business that allow us to be a bit more calmer in terms of the growth of the company.
Yeah. And I love what you said there, being able to go from defeat to defeat to defeat, quickly. And I agree with you. I think that I'll butcher the quote, but essentially it's, you'll achieve success when you can shorten the gap between failures, right? And most people do not understand that it takes a certain modicum of failure to eventually achieve success. Now, in my mind, you don't fail unless you actually quit, right? So you're meeting temporary defeat, but as long as you can overcome that temporary defeat, you will never be a failure, right? And I think that's what you're saying, is that temporary setback, temporary defeat, that's normal. Failing is when you quit.
It's part of life.
Yeah, it is. We talk about regularly. I have 2 kids, and when they were younger, they'd start crying if they fell down or they fell off their bike. And I was like, okay, well, why do we fall? And, of course, my young one was really good at being a smartass from a very early age. Because we're no good? Like, no, we're falling so we can learn how to get back up and do it again. All right. We're not falling down because, we want to stop altogether. We're falling. The reason we fall is so we can learn how to get back up. And I think that's so true of most entrepreneurs. And the ones that I see as the worst investment, quite honestly, are the ones who can't get back up, right? Their egos, their pride is hit so hard and so bad.
Right.
They don't know how to compartmentalize that and move forward. It hits them emotionally, and they can't just tuck that away in a box and move on. Because the other thing you said is that you want them to move on. CEOs have a responsibility, a fiduciary responsibility to their staff, to their vendors, to their investors, their shareholders, to make this thing work. And you can't do that if you don't move on, but you also don't want them to move on without learning the lessons of the past, right? And I think that's a really important insight for a lot of people. So, go ahead.
No, there's a point that you made that I think when we started this chapter of our conversation, that I think it was really important, that I was just thinking that sometimes the biggest mistakes are made after a very successful first business, right? So the typical, let's say, the typical journey of entrepreneurs is they try multiple times and the majority of them go away, give up, right? So the second, let's say, type of entrepreneurs are the ones who are trying again and again. Sometimes they go work for others and they come back and they try again, and there is something that will work. And then you have another kind of entrepreneurs who try for the first time. They were there at the right timing. They knew the right people. They were able to be super successful with their own first business, and they believe that they can apply the same methodology, the same framework to every single company. And that's when they fail dramatically in the second company. If you would know maybe we can even talk about Elon Musk, right? So he almost lost everything. It was really, really close to lose everything about the first successful companies that he had. I was just watching the documentary recently, and it's incredible to see. But yeah, that's the point I say. I think it's also important to, and that's what life is about, is to go through big wins and don't believe that we are the best in the world, because we will face a challenge sooner or later. That's part of life. And also don't go through defeats and make yourself feel that you are a failure, that you are not worth anything because you were not able to succeed with that business. Because I think the stat that is really important that I always share with every single CEO that I work with is only 4% of all companies get to $1 million in revenue. Only 0.4% get to 10 million, and under 0.04% get to 100 million, which shows that 96% of entrepreneurs will never get to 1 million in revenue, right? So it shows how difficult it is, and it is normal. And it takes an outlier mindset to be able to get to this first million, right? And to this first 10 millions, in this first 100 millions. And these are the outliers. Let's be honest. So that's why I always say I'm super grateful for the opportunity that I have with my own businesses and with the businesses that trust me to help them out and to be a member of the team in their success. I had really the luck of being with the right teams and at the right times to be able to have some of the successes and some of the failures that I had in my belt.
Yeah, and it's so important to have those experiences as you're going through it, and then surrounding yourself with the right team. And I want to shift a little bit because you've had an exit of one of your businesses that you were the CEO of, and you guys also had an IPO that you went through. And so as you're scaling a company up, right, there's obviously investment capital that comes in at some point early on. And then the investment capital, sometimes is an Achilles heel for a lot of companies, right? They just rely on that. And they think, okay, well, as long as I have a $100 million investment, I'll be fine, right? And I think it was Fast Inc. that raised $120 or $115 million. I'll have to go back and look it up. And we're out of business like 6 months later, right? And it's something that can happen. It doesn't happen very often because most of the time money's a little bit smarter than that. But walk us through that journey of what it took to. Let's start with the exit that you had. I believe it was you said you guys were acquired by by your biggest client at the branding agency, right? So what was that process like, and how did that even come up?
Yeah, I think that first exit was really very innocent on our side. It was really an opportunity that happened. We kept leading the business as if we were never sell the business, and then the opportunity came, and it was the right timing, both from me, both for the let's say the chairman or the owner of the business. I was a professional CEO at the time, and I was leveraging the chance that the owner offered me to lead his business. So it was really a process of, we were delivering amazing value to the customers. The team was happy, and that customer believed that we could be a strategic asset, and they wanted to internalize the branding agency to be able to offer services to the clients, and even to start providing services to other clients in the network. So in terms of the process, it was really back to basics, right? So ensure that your team is happy, ensure that you have processes that are scalable, ensure that your customers are delighted, have a strategy to keep growing the business, and then the opportunity came, and the conversation went well, and we were able to find a deal that made all the parties happy in the process, right?
I mean, you just hit on some really important points that I think a lot of CEOs gloss over, which is you ran the business without an intention of exiting it, but running the business in a way that you wanted it to perpetuate, right? You wanted it to live on, which in order for that to happen, requires that long-term visionary mindset as well as the day-to-day operations, right? And as you said, there's a lot of pieces in between. Now, I have this, I've just seen this, and so I have this opinion that there are roughly three different types of CEOs, right? There is the startup founder CEO who is the visionary that just loves the idea of the innovation and the new company and growing this company, and just they're really gung-ho about just taking this company to the moon, right? Then you have the second CEO that's more like the small business owner. They're more like a lifestyle business. They're not looking for fame and all of that, the accolade. They're looking to run a business that is stable, secure. It makes them money. It gives them the lifestyle they want. We call these lifestyle entrepreneurs or lifestyle business owners, right?
Yeah.
And then you have the third. It's more like that corporate level CEO. They're the person that comes in to run a big organization, and they're not necessarily looking for any exit because there's already been, it's already a public company or it's a really big company. And so they're really good at more of the operational aspect and just staying a little bit ahead of the curve, but they're not necessarily the most innovative people out there. And I know that you work with a lot of CEOs, so I'm curious how that lines up with what you've seen, and especially having gone through some exits and seeing different types of CEOs. How does that jive with what you do?
That's really amazing. I think that it depends on the moment of my career, but I can identify myself with the three profiles that you just described in different moments. Maybe the exit that we were talking about at my work in the branding agency, I was not the owner, but it was still in a kind of mid-size small business arena. And we were kind of managing the business in that way, always reinvesting the profits, keep growing the business as we could, but not getting crazy in terms of growth. Sometimes getting a bit more frustrated because we wanted more capital to reinvest in the business, and we needed to go through also the ups and downs of economy and of a services business that sometimes it's a bit more challenging to scale than a product business, right? So, but yeah, then when I started Scale Up Valley, I started working much more with the profile of the startup founder, right? So where typically the challenge is they just raised Series A, they had kind of 3 million in revenue, and I wanted to help them to go from 1 to 3 to 10 million in revenue. And later on, I would say the last 5 years of Scale Up Valley is much more the 10, 20, even today, 30, 50 million in revenue, and how do we help them to get to 100 million? So, which are very different stages of growth of the company, right? So going from 1 to 5, I would say it's one stage, or 0 to 1, one stage, 1 to 5, another stage, 5 to 10, another stage, 10 to 20, 25, another stage, 25 to 50, another stage, 50 to 100, another stage, 100 plus. That's where maybe I will go next, or I will stay focused on my 10, 20 to 100 million range, where I've been in my last 11 years with Scale Up Valley. And typically my challenge is to make this startup founder become much more a kind of a corporate level CEO or a small business owner. But something that I learned over the years, and I keep learning, is some of them are more than prepared, and they love to kind of transition themselves from the CEO 1.0, 2.0, 3.0, 4.0, almost to something that I love. It was an article, I don't remember who was the CEO, but it said, I decided to fire myself this year, and I wrote down the job description of the CEO that we needed for next year, and then I made sure that I qualified to become that CEO, and then I hired myself again as the chairman, right? So as the chairman, I fired myself, I wrote down the job description, and then I make sure that the CEO had the skills to be ready to, and then I hired him again, and this was the same person, of course.
Right.
So, but I think it's a good exercise, because we do this a lot to our VP sales, to our VP customer success, to our VP marketing, to our VP people, to our VP finance, VP product, whatever it is. But we never do for ourselves as entrepreneurs, and we also need to go from stage to stage. the other profile is sometimes you are so strong in the vision, you are so strong in the product, or you are so strong in the sales muscle, which is it's much more intelligent maybe to bring on a COO that is quite strong in that corporate side of the business, and to stay focused on your area of strengths, in your area, on your zone of genius, right? So, and I think that's where we are able to find those balances. And nowadays it's curious because I see the trend that we are much more thinking as the small business owner, which is how can we generate enough profitability and cash flow that will allow us to invest in the future, but to not go crazy until we get that proven, right? So it's kind of a combination of the small business owner profile with the corporate level CEO, and again with the startup founder, which is much more a visionary, but a little bit more cautious than the typically startup founder. So in other words, I think that we are trying to find, and I will end with this, and that's why I believe that, you know, the best CEOs are the ones who are able to build the best leadership teams for the stage of growth they are in, because it's impossible to do all of this as one person. And the reality is this: sometimes we individualize the success too much, but it's always a result of a team effort. It's always team success, right? So we all win as one, and we all lose as one. And if I would need to summarize all the work that I do, is to make sure that we have the right people on the right seats with the right culture that enables them to be successful as a team, instead of thinking that, for instance, VP Sales is the best in the world if he's achieving quota and making the numbers that we all need at the leadership team, and the other day the VP Sales is the worst person in the world because we were not able to achieve our results this quarter. This is not typically how a team should work, and we see this a lot of times. That's why I like to say to CEOs, when a VP Sales misses a quarter, but we see that there is work ethic, there are processes, there are procedures, there are systems, there are effort, there are coaching, training of the team, and we know that it will succeed in the upcoming quarter, maybe the problem is not of the VP Sales. Maybe the problem is much more the market dynamics that we are not seeing, is the product that is not suitable to the market, something that happened in terms of the volatility of the market. And again, if we are just doing a finger pointing to the VP Sales and we are not taking ownership of the results as a team, I think that we are not doing a good job for our culture and of our future growth.
Yeah, absolutely. I love that. And something you hit on, it's really important, right? There are these different types of CEOs and stages of the same CEO, right? Because you can't be that, you know, when you don't have $1 million in revenue, you're wearing a lot of hats, and you're being the visionary, you're being the executioner, you're being the marketing guy, you're being whatever it takes to really make the business grow. When you get to 10 million, hopefully you start to develop a C-suite around you that can help out. But we find that a lot of CEOs struggle with relinquishing control. Right? That's one of the biggest challenges they have, right? Is relinquishing control. I think the companies that we've seen succeed the most are the ones that are the best, like you said, building a great team around them. However, the caveat that you mentioned is the team has to be attuned to the stage of growth, right? So give us an example of what that means, right? You've had to go through an IPO. It's not an easy process. Everybody dreams to do it, but sometimes it's not even that much fun, right?
True.
But what was it like pre-IPO and post-IPO in this company for the C-suite team?
Yeah. So typically after the IPO, I leave the company. So I get closer to 100 million, I get them ready, and then I go away. So I would say much more. But I think that the same question applies to the different stages of growth of the company until they are ready for the IPO. And as we were saying, usually in the majority of the times, it is very difficult to have the same team leading the business from 10 to 25 or from 25 to 50 million in revenue. And I would even say more, 5 to 10 and 10 to 20, it's a different team as well. So if we are able to have 50% of the team move on to the next leadership team version, and 50% of the team is recruited, I think this is a a huge success, right? And I think this is, again, really, really important to be honest with each other and to understand that some of us will face a plateau, or will not be able to grow as quicker as the company needs. And then we need to be humble enough to recognize that, or even to understand that maybe we are much more builders or early scalers, not late stage scalers or not corporate guys.
Right.
So we have so much more fun helping companies go from 10 to 20. That's why I was telling you, maybe I will not expand from 100 million plus, because I found my niche. That's where I have fun. I know that some of the principles that I apply to these companies might apply to much larger companies, and I'm seeing this there more and more as I get more and more invited. But yeah, do I have fun with those kind of companies? That's what I need to figure out.
Right.
I know that I have fun at this stage, right? Because I already know what are the
larger
principles.
Company can just be a drain.
Exactly.
Just, it's like, okay, now we're politicking, and now we're arguing over things that, at an early stage, it's exciting, right? Because you're like, okay, what's the next opportunity? What's the next vertical? Like you were saying, we're crossing that chasm, as they say. We're going from the early adopters to the early majority. And once you get into the late majority, and you're just talking about taking a little bit more market share, then it gets to be drudgery. I worked in a $55 billion per year company, and that's really made up of a whole bunch of $100 million per year companies, essentially, right? And if you can have that autonomy, it's a lot more fun. But scaling up and trying to keep growing when you're already in the multiples of billions of dollars every single year, it's a very different beast than, like you said, going from 10 million to 100 million, right?
Yeah.
So, Mike, we're about out of time here. I really appreciate your time. Why don't you tell us a little bit more about Scale Up Valley, how people can find you, and how they can reach out to you and learn a little bit more about what you do?
Sure. I just wanted to quickly share kind of the free critical ingredients of the framework that we have. I think this would be also important, connected to your previous segments of the show, which is number one, it's ensuring that we have the right people on the right seats and the right leadership team in place to scale the business from one stage of growth to other stage of growth. Number two is we have a vision narrative that we have all written down together as a leadership team, and of course also shared with the rest of the team in the company. And the number three is the execution machine, that we have the OKRs, that we have clarity of success and the meeting cadence to ensure that communication happens and that everyone is aligned. We know that cross-functional alignment is one of the most important pains to be addressed when a company starts to scale, especially in hypergrowth modes. But I would say we don't even need hypergrowth modes to face those kind of pains after 100 people, 150 people, even 75 people. I would say even 50, we start seeing a certain disconnection. So this is kind of my North Star of methodology to go through and to help companies to go from one stage to another and get ready for IPO, kind of addressing also your question about what we need to do in order to be ready to create that wealth and to make the company ready to go to the next stage. In terms of me, I publish on LinkedIn on a daily basis all concepts about scaling up. Also have my own podcast on Scale Up Valley, and yeah, scaleupvalley.com. Find me on LinkedIn and listen to our podcast as well. And of course, keep listening to this amazing podcast with Jeff Barnes, that I'm really grateful to be here today with you, and congrats for the amazing work you do, Jeff.
Awesome. Mike, thank you so much for being here today. I really appreciate your time. Great interview. Really looking forward to collaborating more with you as well. So to everybody out there, thanks for watching. Thanks for listening. This has been the Angels, Exits, and Acquisitions podcast with Jeff Barnes. And you have been listening to Mike Diaz with Scale Up Valley. We will see you on the next episode. As always, like, subscribe, and share. Thank you.